Home prices have dropped quicker than my anger after laying into my horn because the car in front of me was not turning. Turns out there was an old lady in a walker crossing the road. Talk about being red-faced embarrassed. The Fed's plan to reduce inflation reminds me of America's war on drugs after, allegedly, the CIA pumped drugs into American streets to fund the war in Nicaragua. So you're just going to flood the street with dollars and then snatch it away from us cold turkey? Come on, you have to ease us off, and preferably without destroying communities. In this video, we talk about the market, what it is today, and over 1 million reasons why we have continued to invest and maybe why you should. What's up, everybody? I'm Sean McMurray, co-host of BPM RIA Online, and this is Mr. $250 million in real estate transactions, my mentor, my good friend, president, and owner of BPM RIA, Anish Dave.
Hey, this is Anish Dave, CEO of BPM RIA, and let's try to make real estate investing made simple again.
The Federal Reserve has utterly disrupted the housing market, sending it from hyperdrive to freefall in a matter of months. Last September, Federal Reserve Chair Jerome Powell said that housing prices were shooting up at unsustainably fast level, signaling that the red-hot housing market will likely have to go through a correction. In many areas, home prices have already started sliding from their previous highs. Although everyone has an opinion, most people just feel like a game of limbo as they try to figure out how low it will go. How has the landscape changed over the past 2 years? For starters, the national average list price of a home in the United States was $374,500 in the year 2020, and the national average interest rate for a 30-year mortgage was 3.11%. Fast forward to today, and interest rates have more than doubled, with the average interest rate sitting at 7.06%, and the average home price is currently up to $525,000, according to an article put out by Forbes. If that doesn't put things into perspective for you, put it this way. 2 years ago, had you bought a home with a 30-year mortgage and put 20% down, you would have paid $536,551 in principal and interest over the length of the loan. At today's rate, same scenario, 30-year loan, 20% down payment, and you are now looking at $1.11 million in interest and principal payments over the course of the loan's lifetime. You're paying twice as much for the same home. How do you feel about that, Anish?
Wow, when you put it that way, Sean, it does hurt if you're thinking long-term, but the reality is, how many people are actually staying in their loan for 30 years? We're not actually even counting appreciation. So even though when you look at the numbers in a long term, it might be a little bit scary, but the truth is, if the appreciation goes up 20, 30% that we've seen sometimes, you'll be more than happy and you'll think it's a bargain in the long run.
Why are interest rates higher today? In short, inflation. The Fed is increasing the federal funds rate, which guides lending rates among U.S. banks to curb out-of-control inflation. The Fed has a target of 2%, while we sit at 8.3% as of September, with the next reading should be out this week, actually on October 13th. How are you feeling about the reading coming out this week, Anish?
Yeah, Sean, it looks like it's going to keep pushing up. I mean, I know the Feds are really prioritizing, stopping inflation, and whether stopping it or decreasing it. So unfortunately, rates are going to go up. It's going to slow down housing in the traditional way, but it depends on which area you live in the US or where you're investing to.
Is it true that housing prices are falling? Even though home values typically undergo a cyclical decline as summer progresses, the results for this year were significantly higher than average. We typically observe a decline of 2% from June through August, but this year, we had a decline of 6% throughout that time period. Although, that number alone is about as misleading as Red Bull's advertising that drinking Red Bull could give you wings. I don't know who actually believed that, but it cost them $13 million. Anyways, in August of 2022, home prices were 7.7% higher than during the corresponding month in 2021. So, Anish, are home prices falling?
Yeah, I'm going to say that they're just kind of adjusting, not falling out of the sky. If you've actually bought a property or have properties in your portfolio, you're probably up 20, 30% compared to about a year or two ago. Even though the prices are dropping a little bit, that should be an indicator for investors that you probably could negotiate with sellers a lot easier.
Why have prices stayed so high?
Yeah, so guess what? We still have a shortage of affordable housing or workforce housing, and people still need homes. So, of course, they're going to still stay up there just because of demand.
Before we move on, make sure you like, share, and subscribe to our channel and hit that notification bell to receive updates whenever we post a new video. Is it better to buy now or wait? Well, we have over 1 million reasons why now is a great time to invest in real estate. Despite all the uncertainty, despite the increase and subsequent softening in the market, despite the increase in mortgage rates, we have still managed over $1 million in real estate deals this year. Of course, you have to plan for the increased risk, but learning to weather the storm is a part of the process. Am I right, Anish?
You're absolutely right, Sean. So, even though the rates are rising, if you're using leverage, and we've talked about this before, other people's money, bank money, you're actually pushing the inflation to somebody else, right? The banker, the private money lender, and this is a perfect opportunity for you to start building your portfolio.
How to navigate the current market. Being able to make money in any economic situation is the character trait of every successful real estate investor. These are the 4 steps that we are following to make money in the current market conditions. 1. Be patient. There's no reason to rush into a deal that doesn't make sense. 2. Obtain a funding source, as Anish stated. Whether you have money or not, OPM or other people's money is an excellent way to increase your return and spread the risk. Be conservative with your numbers. You need to account for the additional risk in the market. Whatever your after repair value is, shave off 10 to 15%. If the deal still makes sense, then you've given yourself that buffer. And 4, multiple strategies. If you are traditionally a flipper, consider holding onto the property and renting it out. Rents are still very strong. If you've been using hard money or loans, consider subject to or OPM. As Anish always says, get good at one strategy, but don't be a one-trick pony. Add tools to your belt. Any other suggestions on how people can navigate this market?
Yeah, so Sean, one of the things is, what are you going to do if you do have some money, right? Is it going to sit in the bank? Maybe make 1% if you're lucky, right? You want to make that money work for you. And what better way to work for you than buying real estate? It's an easy way to really, increase your wealth and your portfolio overall. So I always say, get into real estate. We're still buying, we're still adding things to our portfolio, and we're also looking at, even more motivated sellers too.
There's still a lot of uncertainty in the market. Home prices are still projected to increase throughout the year, but we are seeing softening and in some markets declines. Mortgage rates will most likely continue to rise as the Fed continues its war on inflation. Despite all of that, we are still actively investing in real estate and we are making millions of dollars doing so. As less skilled investors shake out, opportunity will increase for those of us who are able to weather the storm. Anish, final words.
Yeah, Sean, with all this uncertainty, it feels a little bit scary. You're not feeling great. The one thing I could actually be certain about, people need homes. They need a place to live. So as long as, we need a place or a roof, and we don't all become a bunch of campers or buy a bunch of vans and, live in our vans, they're gonna need houses. And it's a great industry to be in. It might not move that fast, right? So, when it comes to money, but in the long run, you're gonna do very well.
And we're out.